Happy new trading week. We're gonna dive into the charts right away, but before we do that, consider Monday a no trading day because of lack of news drivers. Tuesday, Wednesday, we're gonna see around what the markets are giving us. And Thursday, we're gonna go full risk because everything is gonna be much clearer at that point. So let's dive in. As we do every single week, the analysis starts with bonds and interest rates. And I'm looking at this in a very simple manner. I like this to be considered as a bottom because we're trading below equilibrium. But do I want this to be a bottom? I'm not sure. I would still like the price to dig deeper into this weekly fair value gap. Looking at the daily, there's not much I can work with besides this buy-side liquidity resting above, right? And I literally said it in the beginning of the video that I'm not going to be interested in the price and the price delivery first 3 days of the week because of lack of news. We're going to know what the price is going to do because everything below this fair value gap is going to become bearish. And this is going to be my consideration for Thursday, where I believe that if for Thursday we're going to be below this, we're going to be able to go short here, allowing dollar to go higher and allowing for foreign currency such as USD to go lower, BUSD to go lower, Nasdaq, US 500 to go lower, even crypto to go. So this is the main driver for the market. And for Thursday, we're below this fair value gap. I'm going to consider going short here, meaning every single market is going to start crashing again because some liquidity has been built up. And I'm gonna be very interested to see if we can work with or not. Since we just covered the bonds, don't forget to leave a like to this video, subscribe to the channel, and let's continue onwards. Going further, let's take a look at the dollar index. And dollar index is literally retracing into a monthly fair value gap that we kind of expected to happen, which is good, which is something we can work with. What I have is buy-side resting above here and a breaker block that we just bounced off on Friday during NFP. Can we work with that bounce? Yeah, of course, but I want to see some indication in terms of where the market opens up. And for that, I'm jumping straight into 15-minute chart where I see this hourly fair value gap and basically everything below it will continue being bearish. But if we're able to push through it and close above it, then my interest kind of gets elevated and I'm gonna be much more interested in higher prices on dollar, allowing the other markets to go lower, much lower than where we are at right now, which I'm gonna be able to show you in a bit. Otherwise, again, it's gonna very much depend on where the market opens up. At midnight New York time, and then it's gonna become very dependent on the first initial trading days and what kind of setups on the weekly profile we're gonna be dealt with. Okay, Euro. On Euro, my analysis is very simple. Everything below this daily fair value gap is gonna kind of allow this premium built into the market to go lower. And the only way that my bias is changing if we close above 1.08477. So 0.8477 is the shift of structure for me. And everything below it is bearish, with sell side resting below 0.6013 and maybe even hitting 0.4484. GBP USD is telling quite a similar story, but what I like in GBP USD is these equal highs on 4-hour chart. Yeah, and I'm gonna literally put it in my notes after this video. I'm gonna say it out loud here as well, that on forex, if I'm gonna be interested in going short, I'm gonna do it on Euro USD, and if I'm gonna be looking to press a buy button in a way, I'm gonna do it on GU. Very simple analysis for me. Consolidation last week because of FOMC and NFP in the market, right? On Wednesday and Friday last week, and now again Monday, Tuesday, Wednesday I'm not too interested, but if Thursday offers me a short, I'm gonna do that on Euro, and if Thursday offers me a buy on GU, I'm gonna do exactly that. Nasdaq and S&P. So these two bad boys are in a weird place again, because US 500 kind of inverted this weekly fair value gap right here. And this weekly fair value gap is equilibrium of the most recent dealing range as well. You see how precise that is? So very, very honestly, if we want to go short, we want to find shorts in this quadrant. If we want to go long, we want to find longs in this quadrant. And literally Monday, Tuesday, Wednesday, we're just gonna day trade in 1 minute, 30-second chart. Nothing else. We're just gonna look for internal liquidity to be hit and won't gonna hold for any long-term positions. Thursday, I think, is gonna open up the markets. And what my consideration is gonna be now is that I'm gonna very much look at this 4-hour fair value gap. If we close below it, you know the drill. Upside potential is this 4-hour fair value gap at 5187, maybe in 1 hour fair value gap to get filled. Right? If it gets elevated, all-time highs right away. If we continue pushing through this, all-time highs are coming into play. Nasdaq itself, on the Nasdaq, I would consider this as a short. To be fair, again, we're trading above equilibrium. Price here is a lot better than it is on NQ. I'm just gonna note myself this volume imbalance, where literally, if the price manages to go and dig below it, retracement into it will allow something like 16,400s to appear, which we can work with. And then knowing that, we can work with both sides of the market, and we see that in 1 hour chart. I'm gonna be watching for bearish prices to be a possibility this week if we remain on closing basis below 18,084, and everything above 18,084 is not too keen in terms of going lower. And if we close above 18,084, I'm gonna have to see this volume imbalance offer short only. So we're gonna have to wait out a very prolonged, let's say, move to the downside to get shorts confirmed for it. Okay, but market maker buy model just finished off here, and on that you're gonna see more in my PO3 analysis. Don't forget to like the video, subscribe to the channel. It's gonna be a very interesting analysis on power of 3, and why did I watch 17,988 as a draw on liquidity pretty much for like 8 days in a row. So more on that in another video for you. Very quickly, let's go through the other markets. Gold, I think gold is drawing towards 2265,500. If it gets elevated, this fair value gap might hold in the price. But if we don't retrace from this, I think sell side 2146 could be a possibility. What I really like this week is Bitcoin, because Bitcoin just closed above this daily fair value gap. So next draw on liquidity for me is 65,400, and we might even push towards 67,340 as well. Two buy-side liquidity pools that are very, very clean are resting above. So it's gonna be interesting to see. And this is a 50% of a weekly fair value gap that kind of, not too precisely, but Bitcoin that we're working with, right? Kind of held in the price. On Ethereum, like it even more. Basically, if tonight we're gonna close above this daily fair value gap, I'm gonna be looking to close the position. But for me, right now, I'm gonna say it out loud, everything below 3127 is still bearish. And that's gonna be it for this time. More on this on a lower time frame happens on Discord, which I would be very happy to see you guys joining in. And otherwise, I'm gonna see you next week. I hope you liked it, so leave a like to this video, subscribe to the channel, and I'm gonna see you next time. Bye!